This is the Real Estate Insider Show with Ellen Hurley, with hot topics, Q&A, mortgage updates, and more. And now, here's the Real Estate Insider, Ellen Hurley.
Hi ho, hi ho. This is Carolyn Ewing, your Friday host. And no, I am not the Real Estate Insider. Ellen Hurley is your Real Estate Insider, and she is all things real estate. And when you meet with her, talk with her, listen to her on Monday through Friday, you get the absolute best here at FM 105.5 when it comes to real estate. I come in on Fridays sometimes, and sometimes Antonio Lopez comes in on Friday, and he's with us today.
Hello.
And he is a real estate insider in that he is a senior loan officer for Summit Funding. But I am your real estate outsider. I kind of look at the consumer side of real estate and all aspects of where we spend our money. That is from the very smallest money that we put in our pockets and take out, as well as some of those big purchases we make that make a lifetime decision. And remember, call in. We really like to hear from you. And our listeners are very precious to us. We find they're a highly educated group that has excellent questions to provide to our lenders. And also to a special guest we have here today, who is Ryan Lundquist. Just say hello, Ryan. There's going to be more about you in a minute.
Hi, everybody.
Or yours truly. You can call and ask me to say, what did you mean by that? The local number would be the 679-1820. And if you're sitting on a mountaintop somewhere, the phone number is 866-576-105.5. All right. I am going to pass this along to Antonio because he is my co-host today. And more than that, Antonio brings with him a lot of good real estate insider information. Take it away, Antonio.
All right. Thank you, Carolyn. And again, I'm glad to be here today and really excited about having Mr. Ryan Lundquist on our show. We're going to dive into learning about what he does and all about appraisals here shortly. But I did want to go over a couple things, which is most commonly the questions that come across my desk or that I'm asked over the course of a week, which is, where are rates? What are rates doing? Rates got slightly better this week on the 30-year fixed loans on the government side, being our FHA, VA, and USDA loans. We're still dancing around the low 4% range. I'd say 4.25, 4.125. On the conventional side, 30-year fixed, we're between 4.5 and 4.75, but still very, very aggressive rates. When you look at overall historical averages, we're still at very low interest rates, so it's a great time to jump into the market. I also wanted to cover something because I'm going to be revamping a workshop that I've held over the past few years, and we've got a new one coming up. It's going to be coming up on Thursday, May 29th at my office, and it's going to be from 6 to 8 p.m. There's no cost. It's going to be our Home Club Home Buyers Workshop, and home standing for Home Ownership Made Easy. And what we're going to be covering is all the ins and outs, all the information you're going to need to know in order to get into your home. And it's not necessarily set up just for first-time home buyers. If you're buying a second home, or you're a move-up type buyer where maybe you've got a property that you're selling now and it's been a few years since you've been in the market, I want to bring you up to speed on new programs and things that are available to you. And even if you're looking to become a first-time real estate investor, you're going to gain a lot of really good information there. So again, that's from 6 to 8, Thursday, May 29th at my office. And my office is located at 3620 American River Drive. We're in Suite 150, and that's Summit Funding. Again, 3620 American River Drive, Suite 150 here in Sacramento. And it's from 6 to 8, so I'd love to have you guys come out for that. Before we started the show, I was chatting with Ryan and Carolyn about something that has really nothing to do with loans and real estate. But at the same time, it has everything to do with loans and real estate.
It has everything to do with home ownership, ultimately, I think.
That is very true. So this past week, my beautiful and lovely wife left me. Well, she actually was out of town.
That didn't sound good.
No, you've got to rephrase that.
Yeah, she abandoned me. I'll say that.
No.
Okay,
that won't work either.
So she had some family things to deal with out of state, and I was left to be in charge of our 4 wonderful, amazing children, ages 8, 6, and my 20-month-old twins. So I have a newfound respect and honor for my wonderful wife, Alyssa, who I believe is out there listening. So, babe, I love you. I am in awe And I was so thankful when you got home.
On that note, you really do need to see Mom's Night Out. You've got to go see the film some way, somehow, just because it is all about the terror from the mother's perspective of I'm doing it wrong. I'm stuck with these 2, 3, 4, or 5 children, and I don't know what I'm doing. So, we all suffer and do the best we can, and then dads find out just really what that's all about.
Yes, we do.
Anyway, you have something besides saying nice things to your sweet wife and giving us a little lending. Why don't you, talk?
I want to give you guys a little bit of a rundown why I thought Ryan would be a great addition to our show today. I've known Ryan for a few years and was lucky enough to see him speak at a couple local Sacramento Association Realtor events. And, appraisers are in a tough position where they're out there, they need to be kind of a neutral third party to evaluate the home values. And I think Ryan does a fantastic job of kind of demystifying that process, providing it in layman's terms. And I hope here in a few minutes when we come back from our break that he gives us a little insight as to what's going on in our market, because I think that's a big question that everyone has is, where are home values going? So when we come back, Ryan is going to jump into a few different topics, and we'd love to have you guys call in if you have any specific questions that you'd like to cover.
Yeah, well, one thing I would like to continue with, though, interest rates are really, really still low. I mean, staggeringly low.
Right.
I mean, low like people cannot believe. I grew up with real estate interest rates that were around 10%, as I remember. Not in my little formative years, but as I was looking into the market, it was about 10%, and everybody considered that a pretty good rate. And then we inched up in the late 1970s, and we got as high as 19 and 20% that the banks were going to charge us if you went through a bank or, a savings and loan. Those kinds of highs and lows have been throughout the history of the United States. That is, you can see times when banks have just raised, and the real estate market just drops. We've had some different considerations recently, though, in the last few years, and I think we're still dusting ourselves off.
Agreed.
From what happened to us. There was so much loss. And we're down to probably, I'm going to say, 58%, 59% home ownership nationally, which is unheard of. We've always been in the 60s, and not always, but once we really got going as a strong middle class, we held into the 60s. And then this thing has taken us, and even with these very low interest rates, where are we, Antonio? Can you encourage people that now is a good time to buy? What are some of the schemes we use to say buy now?
Yeah, it's one of those things. I think it's human nature when rates are low, they want to get them a little lower, And so it's one of those things where when people really sit down and they're evaluating their home options, you've got to live somewhere. And when most first-time homebuyers that come and sit down with me, I ask them, why are you buying? Why now? And I'd say 9 times out of 10, they're saying, look, I need to find a place to live, and I'm looking at rentals, and what I'd be spending in rent is at least, if not more in some circumstances.
Oh, it's more, very often.
Than I would be spending on a mortgage. And why am I going to get my landlord wealthy when I can create home ownership for myself and my family, build equity, not to mention the tax deduction that you get with the mortgage interest? So I think more and more people are, when faced with, maybe a lease coming up or maybe a job transfer, they need to have a place to have, roof over their head, and they've decided that home ownership is a better option.
I think that we have to bring some reality to the younger generations, the financial reality. So programs like yours, where you bring people in and talk to them about home ownership, it seems the right thing to do. Do you think that you are able to hit that market? Well, you are. You guys do all the social media. Wait do you all listen and hear what Ryan has going on social media? This guy's a star. He knows how to do it. Do you absolutely find that this is where you reach to people to get them to come to events and meetings and what
social media is definitely a huge avenue for us, and Ryan can probably speak to that even more. He's he's doing a lot more than
You
myself.
know, Ryan has become this third person that
I
isn't
know.
really here.
Yeah.
Say something, Ryan.
Hey,
Say something.
I'm just sort of waiting until you guys ask me a question. So
We're getting ready to
I'm the guest.
break because we want FM 105.5 to make sure they can say all the things they need to say here. And I want you to come right back because you will hear from the real Ryan Lundquist of the Lundquist Company.
Let's do it.
All right.
This is Sacramento's Money 105.5.
Hi ho, hi ho. This is Carolyn Ewing, your Friday host for the Real Estate Insider. And it is my pleasure to reintroduce Antonio Lopez, who has brought a special guest today. And I told these two guys they should just take off. So take it away, Antonio. Make it happen.
All right. Thank you, Carolyn. So we've got here with us in studio Ryan Lundquist, who I've known for several years. And I'm just going to let him answer a few questions. So, Ryan, tell me how you got started in doing appraisals.
Sure thing. Well, I guess the story it's wrapped up in my family and my previous career as a teacher. So we began that trek of deciding to have kids, and my wife got pregnant by me, I should say. And and I thought, this isn't going to cut it to have her stay at home, which we both wanted, on my teacher salary. So I needed to look for something else, and I knew a couple of appraisers and said, hey, if I pass a state exam, would you guys be willing to take me on as an apprentice? And that happened, and the rest is history. And I've been in the industry full-time since 2003, and really, really watch things closely. And so,
Typical female. Let me interject something. He starts in 2003 when it's all nice and cushy, right? I mean, it was red hot and rolling.
oh
in
yeah,
those
for
days.
the first couple years of my career. Yeah, I mean,
Right.
the market was on fire,
Yeah,
and then
very much so.
everything
And then, whoa,
hit the fan.
hit
so
the
to
fan,
speak.
as
Yeah,
they say. Yes.
Absolutely.
But not to stay there, but you've been a survivor, and I think that's very key.
Oh yeah, I mean, I think there's been a lot of shakeup in the real estate community as a whole. Loan officers, appraisers, realtors, title reps who are no longer in business because they didn't survive the real estate meltdown and the crash in the economy. And I'm really thankful to be sitting here today and to be thriving. And I consider myself very blessed. But yeah,
It's a blessing, as well as there's, God gives us blessings if we put a lot of hard work in. Sometimes
there's
you have
certainly
to create your market,
Yeah.
You have to go get the business. That's
and you
that's
did
what I
that
think.
too, Antonio. When you came in at wow, this is easy. I can handle
Right.
this.
No, it was, doing mortgages was the thing to do. It's like it was just fast money, easy money. Everyone's doing it. Market was crazy, and then things changed quite a bit. I'm curious. That kind of brought on another question. What, after, say you started in 2003, 2004, things were really rocking and rolling. What did you do to remain in the market? Because we went to a primarily like a foreclosure-based market where there's a lot of bank repos. So what did you do to stay in the market?
Well, I think first, I'll say this, that almost all of my existing lender clients went out of business
Wow.
when the market collapsed. And so there were some meager times where I was looking around the house saying, what can I sell on Craigslist? And
We've all been there.
I wish I was kidding, but I really had to sit down and, take a hard look at things and say, what type of clients do I want to have, and how can I go after them to earn their business, to earn their trust, and how can I specialize in areas that I really want to specialize in, so my business isn't so contingent upon just one industry, the lending community. And so, of course, I did a lot of foreclosure appraisals in
Sure.
2008, 2009, 2010, but really I began, I think, to diversify out of lending work also, where, I do a lot of lending work now, but I do appraisals for divorce and IRS appraisals and estate settlement, and do a lot with real estate agents. And so I, really have been intentional about setting myself apart, I think, in the market, whether it's with my blog, which is very much a top-ranking blog in the Sacramento area, and really, nationally, I think. And so it's just, I've really gone after that business. I speak every single month in real estate offices because I want to connect with people and I want to resource them, and the referrals just come. When someone thinks, hey, I can trust this guy, he seems to know what he's talking about, he helps me do a better job with my business, then I just think that works. And I always think that the moment we stop marketing ourselves and the moment we stop reaching out to people is the moment that our businesses start to die. And we just always got to be networking. And so
Absolutely.
that's what I live by. And
That is.
you know,
And that's how I first met you, is actually at one of these real estate offices, just seeing
Yeah,
you present. And I thought
absolutely.
you did a great job. Before I jump to the next question, how can people get a hold of you? What's your contact info and what's your blog site?
Oh, sure. Best way is through my blog at sacramentoappraisalblog.com, or you can look me up on Twitter at SacAppraiser.
Perfect. So what can you say about the climate of our market here locally? What's going on?
Well, it's a really interesting market. And I will say, I mean, it's always an interesting market. But, after, of course, we had rapid appreciation about a decade ago, the market completely collapsed and really values declined quite significantly, painfully. I'm a homeowner too, right? I know that. And so until really the first quarter of 2012. And that's
Wow.
when the market began to see a turnaround. And it was really the perfect storm that happened then, because prices got down to a level, they were so low that it no longer made sense for people to sit on the fence. But like I always tell people, real estate is like a multi-layered cake. There are different layers that help drive the market. And one of the significant layers in early 2012 was interest rates. For the first time, really ever, interest rates dipped below 4%. And so
Right.
you have this
Huge.
sort of everything coming together at once, where rates are below 4% and even creep down to 3.5%. And that immediately took inventory off the market. And so there's less houses for sale. That increases competition and creates an environment where values are going to increase. But also, you have cash investors enter the market, and they basically gutted the market under 200,000. And so that created this environment all around where there was rapid appreciation. I would say in the Sacramento region, considering Sacramento, Placer, Yolo, and El Dorado County, the median prices increased 61% since
Wow.
2012.
That's
56,
good.
yeah, and a 56% increase in average price per square foot. And so you can see a huge difference in price level, and I think sometimes affordability, people are feeling that now. But I'd say the interesting part about today's market is that it's a little bit different, because it's not driven by the steroids of before, of interest rates in the threes. They're still really low, but it's not as much of a steroid to get people out in the market. Some people are sitting thinking, hey, are they going to get lower again? Hey, they're really low right now. But you also have 15% less cash right now in Sacramento County. And so that really did act as a catalyst for values to increase. And so when you take that off the table, then that all of a sudden means that the market is adjusting now and figuring out, okay, what does it look like to be normal now that we don't have cash driving the train anymore, so to speak. And
Right.
so that's a big factor in today's market, where there were actually about 700 to 800 less sales in Sacramento County this quarter compared to the previous year. And really, when you look at that, there's been a sluggish sales volume, and the big difference is that there were about 700 or 800 less cash sales this year compared to last year.
Interesting. Now, I know we had some big kind of organizations coming out. I believe they're coming out here from back east, some hedge funds and things. They're gone from our market, or are they just slowed down?
Yeah, Blackstone is the most well-known, renowned private equity fund from Wall Street,
They would just
purchasing
come and
local market.
scoop
Yeah.
local
Yeah,
markets.
yeah, they really came on the scene heavily in August 2012, and they picked up a few thousand properties. And so they made a significant dent, I think, in the housing market. And really around May or June of last year, investors began to pull back as rates increased, and so that sort of leveled off values in the market. We have a little bit of a seasonal uptick going on right now, but the market's kind of flirting with stability and flirting with that little seasonal uptick right now. But otherwise, is Blackstone buying anymore? They're really so far their purchases in 2014 are really only in Placer County, and it's fairly a minimal amount. Nothing that really drives the market anymore. Whereas before, under $200,000, especially in Sacramento County, I'd look in certain neighborhoods and think, wow, there's 10 recent purchases from them, but you're just not seeing that kind of activity anymore.
Yeah. And were they looking to mainly buy and hold, or were they flipping some of them?
No, they haven't flipped any. I think they might have had one resale, which was probably a fluke of some sort, but
Okay.
everything else they've held so far. And
Interesting.
everyone says that they'll probably continue to hold. Maybe they would sell in 5 years, but I mean, who knows? Except for them. So, and I know that they do get a lot of flack because you think that on one hand they swooped into the market, and I think there were a lot of opportunities for first time owner occupants.
Right.
I love to see owners in
First time
neighborhoods.
buyers.
Yeah, yeah,
Wonderful.
but unfortunately, Wall Street, entered into Main Street. But at the same time, I think there's a business takeaway here because they saw a trend in the market and they saw an opportunity, and they were able to foresee something that they could do. And I think a lot of people, we can complain in business about that phenomenon, but the truth is that we should all be looking at the
all
trend.
want to
Yeah.
have the business
Absolutely.
work on
And
capitalism.
who
right.
who are my clients going to be in 6 to 12 months from now or in 2 years? And so when they can begin to see things like that, I think there's something savvy about that.
Yeah, that's a good point, and it kind of segues into something I wanted to chat with you about, which I'm really impressed. And you'd kind of have to take your appraiser hat off and more of your marketing hat on, meaning the blogging that you're doing. So, what is it to be a good blogger, and how do you get content, and what do you do?
Yeah, well, I started my blog a little bit more than 5 years ago as just as a way to get found online. Okay, everything's online now, and
Sure.
people are continually asking, or going to Google or Yahoo, wherever they're at on a search engine, typing something in and thinking and trying to find a person to work with. And I figure I would like to be that person, or I'd
Right,
at
why
least
not?
have a shot at it. And so my whole goal is to provide really good information. It's not the yellow pages. I'm not trying to sell myself, but just to say, here's what the market's doing. Here's how you work with appraisers. Here's some tips for, real estate agents or the real estate community. And so I think blogging, it's really an opportunity to share resourceful content. And to anyone blogging or anyone thinking about it, I would simply say, who is your target audience? Who are the people that you want to work with? Who are your prospective clients? And, who are your clients now? And how can you write content that will help answer their questions? Because really a blog post, a good one, answers someone's questions.
You bet it does.
Yeah, because they're on the other end of things, going to a search engine, typing in a question,
Right.
who is a loan officer in Sacramento, or what do appraisers say about this FHA repair, and then they need to provide or find good information, and when they can find that and they feel resourced, then people will naturally think, wow, I really appreciated that, and that person seems honest, and so that's the goal.
And then there's another thing about being a blogger. You have to like to write just a
Right.
little bit.
Exactly.
Absolutely.
And is there a certain secret to the number of posts that you do, and also the content? Is it all your content, or do you grab from different things and take your
His
spin on it?
content is fabulous.
Yeah. No,
That's
thanks.
that's a mother's word. I say these things. It's fabulous.
No, that's nice.
You know what? We're going to be ready to wind down, and you get to hold that question. What
Okay.
can I say? I think this station, FM 105.5, wants to take a break, and look forward to having all our listeners back after this.
Money 1055.
Hi ho, we're back. It's the bottom of the hour and creeping on up towards 1 o'clock. This is Carolyn Ewing, your Friday host for the Real Estate Insider, and I serve as your Real Estate Outsider. We're having a lively discussion with Ryan Lundquist, and he is a blogger par excellence, but his real life is appraisals of all sorts, residential appraisals, helping a lot of people in the marketplace. And my co-host is Antonio Lopez today, Summit Funding. And you all know Antonio. And we were just getting into one last question on blogs.
Yeah. Right before the break, I was asking a couple things. Do you create all your own content that you cover? And then also, is there a rhythm that you have as far as when you post and how often you post?
Good question. Yeah, I absolutely create my own content because I want people to work with me and so it should probably be my words or
Absolutely.
my video, my photos. However, a lot of people blog in different ways, and I post every Tuesday and every Thursday, so
Okay.
twice a
Wow.
week.
That
So-
is work.
Yeah, but then that way people can manage 2 posts, getting 2 emails each week, rather than if I was posting every day, people would think, oh man, I don't want to hear from this guy 5 days a week.
I
Right?
understand that. I used to do a once a week newsletter though. It had about 8 pages of content.
Whoa.
And you're just driving on it all the time, in addition to doing other things. So
Absolutely.
the blog has a rhythm to it as well.
It has a life. It's
Well, I want to take one more second. 5 reasons why graphing is a vital skill for real estate professionals. That is absolutely good information for real estate professionals to have, and how many of them really know the answer to that. That was one of your blogs. Another blog is 10 reasons why public records and the appraiser square footage often differ or can differ. And I'm thinking I could have used that about 30 years ago on the
Yeah.
purchase of one of my homes.
Absolutely.
So these are good. These
Yeah,
are good,
valuable
Antonio,
information. These are real questions people are asking.
that
So,
people ask themselves, and they need to find an answer from someone. Okay.
and I actually have a question, kind of for almost a personal question, as far as what I'm thinking about doing with our home. About a year ago, with the addition of our twins, we love where we live, but we've got a 3-bedroom, 2-bath home, and we played with the idea of adding on a second story. And we opted not to do it, but it's not completely off the table. One of my concerns is overbuilding for the area, and I want to talk with you about that, how that impacts appraisals.
Yeah, no, that's a good question. And essentially, I think what you're asking is, how do we know that if we're overbuilding? And one of the things I tell people to do is to look around the neighborhood and to see what other people have done. If your house is, what did you say, 1,500 square
Yep,
feet maybe?
about 1,500 square feet,
Okay.
3-bedroom, 2-bath.
And so if it's a neighborhood where there is nothing but 1,500 square foot homes, and then all of a sudden you become the home that's 2,000 square feet, then you're going to suffer some loss probably, because buyers in that area are probably expecting to pay for a 1,500 square foot house. And so you've got to really know your surroundings. If there are many other homes of a larger size or 2-story units, then I would say go for it, and that could be good for you. But people really have to consider, though, what type of improvements should I put in my home, and really have to know the market, and sort of have to put on, I think, in some senses, a real estate hat to look around and think, if I do a $50,000 kitchen remodel in a $200,000 neighborhood, I'm probably not going to be able to sell
Not
this
gonna
house
get
for
your money.
$250,000. So
Right.
you've got to really know where you're at. Where maybe if you're in a neighborhood with higher values, and you get a little bit more money in the resale market for that kitchen, great. Or if you're going to sell in a year, then you probably don't want to put in a built-in pool right now, because you're going to lose money right away, because there's no way you're going to recover all that. And so when it comes to overbuilding, though, I mean, I would say for anyone to just be cautious about being the largest house in the neighborhood, because you want other people to build the largest one, and you want other people to have the most upgraded home so that you can benefit from what they've done. Okay, they're going to probably lose a little bit of money, because there's no way they're going to recover all that in the market, because buyers certainly don't want to pay for all of that in the resale market. Okay, can I give an example?
Absolutely.
I recently appraised a property. A homeowner called me and said, my house has been on the market for 200 days. I just want to know the real value. Okay. I don't know what's going on here. It's not selling. And it was a 3-bedroom, 1-bathroom home, bought a few years ago when the market was really down. And the guy put in over $100,000 into this property. Okay. It's a first-time buyer neighborhood. And the problem is it was priced at a level with houses that were exponentially larger in size, that had 2 bathrooms, that had larger lots, that had built-in pools. I mean, this house was beautiful. He did an amazing job, but the only problem is that other 3-bedroom, 1-bath homes, guess what they're selling for? $185,000. And so there's a price ceiling in every market. Okay, he technically put in way more in his house. He overbuilt it because the market wasn't willing to pay for that. So he suffered economic loss because of his improvements. And unfortunately, he didn't survey the market. He should have looked at what other flippers were doing in the neighborhood and what other owner occupants were doing. Low-grade kitchen cabinets, standard amenities throughout. But he went wild, and unfortunately it's really hurt his wallet. So
Yeah, wild will cost you when it
yeah,
comes.
yeah,
Probably in every industry, wild will cost you.
yeah, yeah, absolutely. And one more thing about the price ceiling is that buyers will look at a certain neighborhood, and at some point they're not willing to pay above a certain level because in this instance, say 185, 190 was really the top of the market. Okay, if someone's going to spend like the list price $250,000, they're going to look in a superior area and think, wow, why would I pay 250 for this 3-1 when I can go in a neighborhood and buy something much larger, or in an area that's safer, or whatever they look, whatever their
Whatever their
criteria is. And so
requirement.
yeah, I would just say know the price ceiling.
Yeah, that's a great point. I actually had another question that came up from a client who's looking at a refinance. And they purchased a couple years ago in late 2010, early 2011, and they've seen some appreciation.
They have.
They're an FHA client, so there's a pretty hefty amount of mortgage insurance on there, and they do have the 20% equity to be able to remove it. And their concern was, they said, Antonio, if we do this refinance, can they reassess my home value and charge me at a higher tax basis? And I don't believe so, but I think we had chatted a little bit about it. Can you shed some light on that?
Yeah, no, that's a great question, and people have asked it before, and I actually have a blog post about that. Not a surprise, but basically what triggers a reassessment of a property is when there's a change of ownership that's taken place. And so a refinance does not constitute a change of ownership, and so that shouldn't impact their assessment, okay? In California, we all know when a property is purchased, there is a Proposition 13 value. It's called the base year value. And every subsequent year of assessment will be based on that value. So you buy a home for $300,000, and the assessor is going to look to that base, and every year they can add on 2% to that. Okay, if the market tanks, then your assessed value might go down, but it can come all the way back up to $300,000, but it can never get above that level. It's a safeguard for the homeowner. And so in your friend's case, they're stuck at that 2011, 2012 level whenever they bought. And, they've probably had 2% increases ever since then. So does that make sense?
Yes,
Yeah.
it makes sense. Now, I want to put something in here that is another segue, because I think this is very important. When you look at Ryan Lundquist, he is a real estate appraiser. Okay, fine. He goes out into the marketplace, but he also spends a lot of volunteer hours. You give back to the community, and I know that it isn't just the blog. So somehow you find time to do the kind of work to help the kind of people, help some people out there who maybe need a little extra help. So what is your passion?
Yeah, well, I guess I'll say this. I love being in business. I love blogging, all that stuff. But really, at the end of the day, I think, am I making a difference in this world? Because things matter far greater than, having a nice house or having a fat bank account, which I would like to get fatter, actually. But yeah, I mean, I run a volunteer organization to help advocate for homeless students. It's called Project 680. And yeah, that's definitely a passion. But just loving my neighbors is huge in my world. And I think that being in a neighborhood means I'm a part of a community. And so that means we're going to host neighborhood barbecues or try to bring people together. And that can make a huge difference because it helps people transition from just feeling like they have a house to feeling like they have a home in a neighborhood. And that means the world to me.
And we're going to learn more about that, more about the lending side, and answer more of what we hope are questions in the minds of the listeners as we finish up this segment and take another look at 105.5. Let's hear from what's going on out there in the world. Hi ho, hi ho. This is Carolyn Ewing, returning with you, the Real Estate Insider, Ellen Hurley's program. All things real estate, all things business, how you spend your money. And we were just talking off the program a little bit about how the appraiser is very often the bad guy. And I think real estate appraisers have had to change a lot from before to after the big meltdown. That is, there's a lot more tightening in how appraisers work.
Definitely.
And how casual it is to call up your own appraiser. But not to get into that, Antonio, I know that you had some questions dealing exactly with that, about what if you get a bad Come back here. You're the bad guy. Say it
Yeah,
out loud.
so it's I've got a couple tomatoes here that I'm going to be lobbing over at Ryan. No, I joke about that because in our industry, a lot of times, when we're in the thick of a transaction and the appraisal comes in low or lower than the sales price or the purchase price or whatever was negotiated on the contract, oftentimes the first place is to go to the appraiser and go, well, you got to fix this. I mean, it's got to make the value. But that's not the entire truth. So I want to bring Ryan in and share with us what goes into a situation like that. Why do certain appraisals come in quote unquote low?
Sure. Well, it's important to realize that in a real estate transaction, an appraiser's job is to be a neutral third party. The appraiser's not an advocate. The loan officer, the agent, they want the best possible price for their client. They want the best possible deal, but the appraiser's not really playing on the same team. So when an appraisal comes in, quote, low or lower than the contract price in a real estate deal, then everyone's thinking, man, you got to take a hike because you are out of sync with value, because clearly there was a buyer and there was a seller. They agreed upon this price. It's got to be worth this amount. But really what an appraiser is measuring is market value. What's the most probable price that this property should bring in an open and competitive market without any duress? And what would, say, if you lined up 100 buyers, what would most of them pay for this property? Okay, because you have your out-of-town buyer, your investor, or your guy from San Francisco come in, with wads of cash in his pocket, and he's going to overpay. Or you have your first-time buyer using an FHA loan. They're not really putting their own skin in the game, their own money. So, of course, they're going to offer $20,000 higher than anyone else. And so there's a lot of reasons why people overpay in real estate. I mean, I see it all the time. Right now, the market is going through a softening phase where it's taking longer to sell properties. There's less cash available. There's less offers. It's not the market of last year where you would list something at literally any price and probably get an offer at or above that price. We're in a different market right now. We're in a very price-sensitive market. And so it's really important to price properties properly. I was just talking with an agent yesterday who called me and said, I don't understand this appraisal. And in this case, I think this appraisal was legitimately a bad appraisal. It was very low. The more I talked with the agent and sort of reviewed the work and such, it was unfortunate, some of the adjustments that should have been made in the report but weren't. A couple comps back to the freeway, but that wasn't mentioned. And you think that might impact value a little?
Absolutely.
Yes.
And so there is such a thing as a bad appraisal, as everyone in the real estate community knows, but there's at the same time a huge difference between a bad appraisal and an appraisal that happened to be lower than the contract price. Okay, and appraisers are like a target, and you have to have thick skin because everyone and their mom will fight you and say, well, I just feel like it's worth more, and really what you have to look at is, well, what is the market saying here, and what does sales data say, and so that's, at the end of the day, and what do current listings say? You have to build your case. And so that's what an appraiser does.
Well, and I think it comes down to numbers, too. I think that you have to be able to produce a factual, documentable process that is truly third-party and independent. And if you've checked all of that through and done your work as the appraiser, then it should fit within the scheme of things. I do think that we have some new legislation, new laws, both at the federal level and maybe even the state level, that kind of keep appraisers more as a third party, putting you out there so that you will do an independent job at all times.
I think so.
And I'm not suggesting you didn't. I'm just saying
No.
I think there's been more push to put you outside, and have you do something truly independent.
No, absolutely. And I will say one of the challenging things about real estate, not just for appraisers, but for agents, is really interpreting the market. Okay, because the truth is we can all look back at stats over 5 years ago and we sound like experts when we interpret them and speak eloquently about days on market and interest rates and median prices and the average price per square foot. And we sound like, real estate
We're really
geniuses,
smart.
but when we look at the current market and establishing a value, the market is moving right now, and it's being driven by all these different layers of the cake, so to speak, as I mentioned before. And so ultimately, we have to come to a decision. An agent would say, how should this property be priced? And an appraiser is going to not look at the price, but look at, well, how much is it really worth? And so last year when the market was on fire, there was one month where the median price increased in Sacramento County by 8 to 9% in 1 month.
Wow.
Okay? And so appraisers, I think, were behind the ball a little bit. And, appraisals should have been coming in a little higher. But when you're in the middle of something like that, it's not easy for appraisers and it's not easy for agents either, to be fair, to really interpret that. So believe me,
Right.
last year I had a lot of agents come to me and say, I can't make sense of this market. I don't know what's going on. In all my 20 years of real estate, I've never seen a market like this. And so there's something very humbling about real estate. And I think that part of being professional is just really acknowledging that.
Well, have you found too that sometimes, like I think Standard and Poor's does a national market trend all the time about real estate. They have this huge market trend going on, but when you really break it down, they're talking about very urbanized areas, and a lot of this around us fits a slightly different category. I mean, I would think you'd find odd 2 homes on a lot in certain counties. You just find a lot more unusual pieces that you have to put as part of the package.
Yeah, and I'm really glad you said that because there are many markets within a market. Okay, we might look at the trend and think over the last few months in Sacramento County, there's a slight seasonal uptick, of 1 to 2%. But in other markets, it might be very flat or flirting with, values maybe going down a little bit. But every market is different. Above $1 million in Sacramento County, there's a year worth of houses for sale. Okay,
Wow.
between
Yeah, those are
between
slow moving right
200 and 400,000, there's just over a month. It is really aggressive. Inventory is so low there, so there's a lot of competition. And so you always have to look at the market segment and really know the price level, the location, the neighborhood, what's coming in the future of that community, what really makes value move in that specific area, not just national stats or what the president says or what Zillow says, right? So.
And I think, too, that you always need a professional by your side. And so I want to make sure that if I were going out to get a home loan today, I would go see Antonio Lopez. And I want you to tell us how we reach you.
I want to make sure you have my direct phone number. It's
You bet.
916-692-2761. That rings right at my desk. And then also I want to remind everyone about our home club workshop coming up on Thursday, May 29th from 6 to 8 p.m. And I also want to make sure people know how to get a hold of you, Ryan.
Hey, thanks so much. And thanks for having me out here. I really appreciate it very much. SacramentoAppraisalBlog.com, Sac Appraiser on Twitter, on Facebook, Facebook.com/Sacramento Appraiser, or good old-fashioned telephone works really, really well, 916-595-3735.
This is very important, and I didn't want to wait too long and then not get both of you in, because I like to make sure that the listeners know how to reach the people who spend their time and give us their expertise. I won't let you go away yet, though. Absolutely not. Just say one more thing, like wish the listeners hello, and we will see you another time.
Hey, thanks everyone for listening. We will definitely see you again.
Okay,
Thanks.
awesome. And Antonio,
Have a great
it's
weekend, guys.
Always good to see you, and I love to have you co-host. This is fun. Although I realize some analyticals out there are saying, I don't want to have fun. I just want to learn things.